Writing to the president, 173 footwear companies, as Emma mentioned, writing the following: as an industry that faces a $3 billion duty bill every year, we can assure you that any increase in the cost of importing shoes has a direct impact on the American footwear consumer. On behalf of our hundreds of millions of footwear consumers and hundreds of thousands of employees, we ask that you immediately stop this action to increase their tax burden. Joining us now, Sam Poser, Susquehanna analyst. Great to have you with us on the program, Sam. How successful would that letter be?
Oh, goodness, it's hard to say. I mean, they've got every major brand speaking up, so, I think everybody's very hopeful that it doesn't add, that it works. I mean, we'll have to see. We've got the G20 coming up at the end of the month, which almost coincides with the end of all the comment periods and so on, and apparently they had to extend the comment period or the days for the comments, and because of the number of companies that want to speak. So, I think there's a good chance that it works, but it's, I think it's a little too close to call right now.
Sam, not surprising that this area of retail are the individuals, the companies writing the letter. As you point out, Steve Madden, 93% made in China. You're positive on the stock. How can you still be positive if that's the dynamic that could play out with their biggest importing country?
Well, first, I'm because they don't really have a lot of competition on the way they do what they do, and the play in the general sense it is going to be for everybody. How do we maintain our gross margin dollars and continue to grow the business? To think that if this 25% duty comes down, it's going to be hard to imagine that the people are going to be able to maintain their gross margin percent. All they're going to be fighting for is the gross margin dollars.
Yeah.
Where the thing is though, that Madden's a big company, as are many of the ones that wrote in the note, and some are smaller. And since they are working to move production, it's a slow process. But they have the wherewithal and the product that the people want. So I would say, while it's certainly maybe rocky if this happens, as we wrote in the note you're referring to, we called them the sole survivor, and play on words.
So, Sam, just a final question for you, and I think it's an important one. You can talk about Steve Madden, the imports coming from China. So much of the product is made there. Let's talk about Nike. Fair bit of product made there, but also it's a sizable market for them as well. I was catching up with an Apple analyst a little bit earlier about the prospect of a product boycott. Could that kind of thing play out for some of these companies, and which companies would it be more important to?
Well, I mean, it would be important to all of them if it played out. But I mean, the thing is, people are still watching NBA basketball, and Nike sponsors athletes and so on, and the core consumer for many of this product, people that spend the money are, call them 15 to 30, and most of those people just want the newest, coolest thing, and probably aren't paying too much attention to all this the way we are. And remember that only 25% of Nike's product is made in China, and I believe that the large majority of that product is made to serve markets outside the U.S.
Yeah.
So it just, look, the whole thing just puts tons of pressure on everybody, we're all talking about the worst case scenario now. But we still don't know how the whole thing's going to fall out, and the footwear industry is clearly united to fight this, and it's getting a lot of press, including me on television right now.
Of course. Well, you're the analyst covering the stock, Sam. We've got to get you on.
I appreciate that. Thank you.